Welcome to another S&P 500 analysis. Today is January 12, 2022. Ever since the bounce from Monday's low, we see the S&P 500 is moving back up toward the all-time high. And right now it's sitting at the edge of a balance area. And we're going to take a look at that price action and see, is it going to continue to move up or is it going to reverse and move back down to retest the Monday's low? So stay tuned. Now let's start looking at the sentiment chart before we take a look at the S&P 500. As you can see, today the S&P 500 kind of printed a little bit of a doji candle. And right now it seems to be a little bit of an indecision, although we got a gap up. And here's this Monday low. But we're going to talk about these level or the the price level little bit more detail later on, but first I want to bring you to the attention of the VIX here. The VIX is back under the 20 level again. Once again, the market participants are relatively complacent. It doesn't have much fear, although up here it kind of got them a little bit fearful. Then in matter of fact, on Monday when it was dropping, we also saw the VIX kind of came in and went above the 20 level, but at the end of the day it closed back below the 20. And also the put call ratio, as you can see, the put call ratio and also came up, and it did went above the 0.75 a little bit, but then at the end of the day it also closed back down below the 0.75. Right now today it closed at 0.55. So again, the market participant are putting on risk. And here we notice that the last couple of days, even though on Monday we have a negative up-down volume ratio because of the initial sell-off, and only at the the afternoon that we saw that little bit of a reversal, then kind of helped lift the up volume a little bit more, but did not overcome the the down volume. But again, the last couple of days was quite positive on the up-down volume ratio, except today at 1.6, it's not too bad because we did have a little bit of an indecision here. So the market is trying to decide which way to go. And we're going to take a look at that a little bit later on and see where it might go once it decides which direction to go. And also the advanced decline didn't do too much today because, matter of fact, there were a time that the decliner was outnumbering the advancer, but at the end of the session, the advancer ended up with 100 more advancing issue and declining issue. But yesterday it was much stronger. Yesterday we have about a little bit over 1,500 more advancing issue than declining issue, and also the up-down volume ratio was a little bit over 5-to-1 in favor of the up volume. So yesterday was a strong follow-through day on the Monday recovery. And also notice the new low, the new 52-week low on Monday, it was over 200. It's actually 202. And we see today it actually went down to 63. So that is quite a change. And the new high never budged, because it's basically hover around that 100 level throughout this pullback here. So that's a little bit encouraging. And today and yesterday, we actually saw a positive new high, new low. In other words, there were more new high than new low, or except on Monday with that initial sell-off day. On Monday initial sell-off, we did see 109 more new 52-week low than 52-week high. And for the New York Stock Exchange cumulative AD line, there's not too much here to discuss because there's not much any divergence to be to be warned or attention here, other than this huge divergence that is still exists here. So we're still waiting for this to get resolved. And here, looking at the Nasdaq, the Nasdaq 100 also had a little bit of a doji type of a day, and it also gapped up as well. So again, also a little bit indecisive, and we did see a negative up-down volume ratio and also a negative advanced decline. So the Nasdaq is a little bit weaker today than the New York Stock Exchange. So we see continued weakness in the tech area, and that's why we're seeing these negative breadth here. But one encouraging sign in Nasdaq is also the new high, new low. We see that the new low, the number of new low was actually up at the 725 level. There was 725 new 52-week low on Monday versus only 75 new 52-week high. But then you look at it today, it's only 160 new 52-week low. So that's quite a contraction in terms of how many of new low was made on Monday comparing to today. And also the new high, kind of stable as well in this 70, 80 area. So right now today is only minus 83. So that means there was only 83 more new 52-week low than 52-week high in the Nasdaq market. Now, for the Nasdaq cumulative AD line, there's not much to talk about either, except that so we're still seeing a huge divergence here. We also saw a little bit of a divergence here because here came down and this is actually going up. But that's minute comparing to this divergence, right? This right here. So we need to get that resolved before we even talk about any sort of internal strength in the Nasdaq market. So from the internal, we see that New York Stock Exchange might be firming up a little bit because there is a rotation going on away from the tech or the growth-oriented stock into the value stock, and that could help cushion some of the weakness from the tech sectors, and that's why the S&P 500 is outperforming a little bit over the Nasdaq, especially the Nasdaq 100. Now let's go and take a look at the E-mini S&P 500 and also the SPY, the ETF for the S&P 500, and see what are some of the levels to keep an eye on in the coming days or in the coming week. First, let's take a look at the S&P 500 cash index on a daily chart. And as you can see, from this all-time high down to the Monday's low, the S&P 500 lost 236 points or 4.9%, almost 5%. And from the Monday low to today's close, it actually recovered almost 145 points, or a little bit over 3%. So, it's quite a recovery. And also, we had quite a quick, close to 5% drop. A lot of talking here, talking about potential crash and all those things. But right now, if you look at this chart here, it doesn't look like anything have really broken down, right? Because it's still pretty much in this channel here and it's still trending up. And right now, it is trying to turn up. Although today, we saw a little bit indecision here by this doji candle here. But we never know, it's all it takes is a couple of days of 50, 70 point move and we be back up at the all-time high. But again, could easily reverse back down. So let's go and take a look at the E-mini S&P 500, and that is the future, the S&P 500 future, and see what are some of the key levels to keep an eye on. Let's take a look at the E-mini S&P 500 market profile. Let's kind of eyeball some of the balance area, and I'm just going to draw it in what I see as a balance area based on the TPO, we call it, that has spent a lot of time within a certain price range. And I see it could be also somewhere around here, down here at this area. So what we see right now is the price is sitting right on the edge over here in this balance area. And it could go two directions. Right? One is break out of this balance area and move to this what we call the low volume area, where there's very little price acceptance. In other words, a lot of, in the market profile, there's very little time spent on these prices. And in the volume profile, we see very low trading activity. So result very little volume at these price level. Then what we want to see is for this thing to move up into this balance area. And once it's in this balance area, then we can see that there's a possibility of it come up to the range, and then all of a sudden the all-time high is back in play. Then the other one is that this price here could not get out of this balance area. Instead, it get rejected. Try to get out and get rejected back in. Then we'll see that price will most likely come back and retrace back down to the opposite side of this balance area. And if it breaks and doesn't get back in, and here we see that there is a single print, right? This single print area that need to get filled. And if it come down and fill that print, those single print, then we can see price could possibly move down to this point of control here, right down here at 4602. So it brings it down to the 4600. Then once again, we could see that there could be a balance area here. So in other words, once it come into this area, we could see that it could work its way down to this 4602 area. Okay, so that is the market profile scenario based on the TPOs. And now looking at the volume profile, we see that there is this high volume zone here. Right, that's basically our balance area. And once again, we're essentially sitting near that edge of this high volume zone. So if it breaks, and here is this low volume area, and it will come up and see, would it get into this high volume area up here? And if it does, then all of a sudden the all-time high is back in play, right? Because once it get up there, we expect it to, kind of move toward the upper boundary of that balance area. But again, just like the market profile analysis, if it come up and get rejected, then we expect it to come back down to the bottom of this balance area. And if it can hold that and break through, then we're essentially looking at this high volume node here. And that is that 4601, 4602 area. Right, so that's basically what we are watching for that possibility down here. So that is the volume profile looking at the ES, the E-mini S&P 500. If we take a look at the SPY, the S&P ETF, you can see also similarly, right now the price is sitting near this balance area. Here's this high volume zone here, and also up here there's another high volume zone. I kind of marked it off with this blue rectangle. And right now we're basically looking to see would it be able to push up. If it get above this 472 area here, essentially this pivot high, then we could see the possibility for this thing to come up into this zone, and that would be somewhere around the 274.5, 274.71, 274.5 or so. Then we could see this thing could move up into this zone, and all of a sudden this all-time high is back in play. And once again, if it come up and get rejected and get pushed back, then watch this 466.5 here. This is the this composite volume profile value area low. So if it come to and break this break below this area here, then we can see it work itself down to these lower volume zone here, this 461.5 and the 459 area. So that's how we break it down on the SPY and the ES for the S&P 500. So be sure to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.